Good day, everyone. It's Vin Maru from Financial Liberties, and on today's live stream, we're going to be covering precious metals again. We'll look at some of the gold and silver charts, what's happened with the CME margin raises. This yesterday was announced, and what the implications for that mean. But more so, I wanted to focus on some videos I've been finding online talking about Donald Trump and wanting a weak dollar policy, which has actually benefited gold over the last year. And then there was a video clip of someone I'm going to show that thinks that Trump actually wants to make gold $20,000 and remonetize it in the financial system, which includes XRP as some of the payment rails that will be used alongside the stable coins. So I've been talking about XRP for years now, probably well over 10 years, and more so in the last year, and it's consolidated. We're not going to look at XRP today and what it means for the new financial system and the paradigm shift that we're entering into, because we're going to be focusing more on the gold and silver markets. But there has been a video that's been going around. I even actually put it up on my YouTube channel in the shorts with Trump talking about a weak dollar and why he doesn't think it's such a bad idea. And so, yeah, how about we just start with that? We'll get into the weak dollar policy from Trump and take a look at the video, and then we will see the reaction from someone else wanting to say it's going to go to $20,000 based on Trump's initiative, I guess, if that's what you want to call it. But we're going to minimize this, and here's the actual video clip that I did find of Donald Trump. Let me just get this opened. I'm going to try to expand it out a little bit. I did make a short for this, but it was kind of chopped in a different way.
No, I think it's great. I mean, the value of the dollar. Look at the business with dollars doing great. It's very interesting. If you look at China and Japan, I used to fight.
Actually, I'm going to start that over.
No, I think it's great. I mean, the value of the dollar. Look at the business with dollars doing great. It's very interesting. If you look at China and Japan, I used to fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. They devalue. And I said, not fair they devalue because it's hard to compete when they devalue. But they always fought, no, our dollar's very good.
So it was a very short clip of him talking about that. That was pretty much it. And oh, there's a lag on this screen. There we go. And as you can clearly see, he's okay with the weak dollar. And in fact, if you actually look at the charts of the dollar, it has weakened significantly. Actually, let's just go pull up the chart right now and take a look at it. Here, I'm just gonna increase the size of this. Let me change this to the daily chart. So you can see on a weekly basis since Trump came into office this past year, the dollar index was at a 109. It's now sitting at 196. And in fact, over the last 2 weeks, it's broken down between a support line, channel line that I drew a while ago. So, you know, during the Biden era, we did see a big rise in the value of the dollar up until October 2021, which is pretty much after COVID time. Then it went into this sideways chop range. But ever since Trump started here's January 2025, you can see it was at 109 and now it's at 96. So the index has actually lost 10 points off of it. Now, could we see a bounce from here back up? Possibly. Could it continue to weaken? Looks like it. I mean, if you look at the indicators here, the MACD is not even in a positive territory, and we're starting to see a red bar here. So my suspicion is if this kind of continues, we could actually see the dollar index go back down into the 90 range, which would be down here as the next major support level. So that's something I'm watching for, but it seems to be there's a clear breakdown in the last 2 weeks on it. It's broken a trend line that I had for a while ago. So overall, I think his policy is that he is going to try to weaken the dollar further, make exports cheaper for the U.S., including oil, because I mean the U.S. is a big, significant exporter of oil. And his policy has always been to try to bring manufacturing back into the U.S., and as a result, he does need a weaker dollar. So what did that really mean for gold? Let's just pull up the gold chart, and you can clearly see January 24, it started to rise. It broke above the 2000. That was going into the election time. We had the election, it pulled back and consolidated, but ever since January 2700, it started to break out 2780, and since January onwards, it really hasn't looked back. I mean, it's gone up one, it's consolidated, it's a bull flag move. Then we've seen this another move up, a pullback, and now we've just seen it gone parabolic. So literally, from January, when he started taking office, gold was sitting around $2,660, let's call it, $2,650-ish, and now we're well over 5,500. So it literally has doubled plus in the last year since him taking office. So his weak dollar policy has actually benefited gold, and we can clearly see that. Now, what does concern me are these major candles up here. I mean, to see big candles like that, you could see a pullback. On Saturday's live stream, I discussed this red green channel line here, this uptrend line, as eventually becoming support. Will we get back down there? I'm not sure, but I mean, looking at just the Bollinger Bands, I'm just going to go to the daily chart on this. I mean, look at the Bollinger Bands. It's kind of been riding up the Bollinger Band, then came back down slightly below it, consolidated, broke up of, and now has been riding since the 19th, way up the Bollinger Bands, from 4,600 to 5,600. That's another $1,000 move on gold in literally just over a week. It's been pretty impressive. I got to see the last bull market play out, and I was involved in the metals and the miners, and just to see a move on $1,000 in over a week. I'm sure it happened in the last bull market, but no, actually, I can't even recall that it even did, because in the last bull market, gold literally went from the bottom of the gold bull market around $280 to $2,000. I mean, the best we probably saw was $100, $200 moves in a matter of a few days or a week. This past week, we've seen $1,000 moves. So, where gold's from here, I don't know. I hope it does pull back a little bit, consolidate. I don't suspect we're going to go back into this. I mean, if we do get a pullback, I think this 4,600 range is where we're going to really start to get aggressive on buying. I don't see it coming back or going much below that. Central bank buying is there, investor demand is there, a lot of uncertainties in the geopolitical markets. So I just can't see a scenario where gold's going to go back below 4,500 and lower. Not in the cards for me, anyways. Maybe there are some other people that will call for that. Who knows? Unless Trump decides to change his policy and wants a stronger dollar and fix a lot of the issues and stop the rhetoric of global dominance and that sort of thing. But nonetheless, that's where we're at. I'm still bullish long term, so it's something on any major pullback. I think it's still a buy, and that includes the miners, and that's something we discussed on Saturday's live stream, and I'll be doing another video on that very shortly. So That is gold. Now, why I say 20,000, it wasn't me calling this, but there was a video, a clip that I found someone else talking about it. So I actually want to share that. And I'm just going to move this over slightly. And here was the short video that I made about it. Does Trump really want a $20,000 gold? Oops. Does Trump really want a $20,000 gold? I'm trying to get it onto this screen. Does Trump really want a $20,000 gold price? Here's what this guy has to say.
So Trump has said he's going to take gold to 20,000, and he's got this whole scenario to do just what you said, John. He's going to have Bitcoin. He's going to have gold. He's going to have XRP. He's going to have a stable coin. He's going to back the stable coin by the full faith of the U.S. dollar, backed by gold. You buy the stable coin. The big stable coin is going to be used to buy treasuries. Now the world has confidence in the dollar because it's partially backed by gold, it's backed by the U.S. economy, and that is our recovery coming right there. And so what the Trump did, we now revalue to basically create $6.2 trillion coming in to the coffers to do what we just said by Trump raising the value of gold to $20,000. Everything repeats.
Does Trump really want a $20,000? So that was his projection on he's what he says Trump's saying. I've never heard Trump actually say a $20,000 price on gold or him wanting to revalue it. But some of these things are never discussed in the open markets. I mean, I'm sure there's a lot of talk behind the scenes in with the central bank and the treasury about gold as its role. And I think part of the whole reason why and this $20,000 number is not something I have not heard before. I mean, Jim Rickards has talked about it, other analysts have talked about it. So it seems to be a price benchmark that we can actually look. And does it make sense that it actually can go to 20,000? I think it could. I'm not saying it's going to happen anytime soon, but could we see it over the next few years, maybe 7 years, as this bull market matures? Absolutely. And the logic behind it is with a revaluation of gold, then they can issue more money out, reduce debts. So there's a lot of factors in play as to why $20,000 could be a good target to look for as your final destination on gold. I don't even know if that will be the final destination. It is a destination price that a lot of people have been talking about. But why I say 20,000 is very reasonable is because you look at the last gold bull market, gold went from $280 to over just about $2,000. So that was about an 8x move. So when gold broke above 2,000 this time around, if you take an 8x move on 2,000, you're at 16,000. Now, if I'm correct on these wave patterns, the first bull market started in 2001-ish, let's call it, ended in 2012, a 10-year bull run. That was an 8x move. That's wave one of 5 waves. And so we saw one wave up and then a corrective wave for about 10 years. Now we're in wave 3 up. And usually wave 3 is the biggest and best wave up when you look at Elliott waves. So if the first wave up went up 8x, it would not surprise me to see gold go 10x on this wave, maybe even more. So if you take the last overhead resistance price of 2,000 and this breakout in gold above 2,000 starting of the new bull market, can 10x be a possibility for wave 3 up? Yeah. So 2,000 times 10 is your $20,000 gold price. So is that unreasonable? No. Will it happen? Possible. There's got to be a lot of conditions to get that pricing, and that's either a revaluation of gold as a deliberate policy by government. I think that could be in play. There has to be a currency crisis, so everyone ditching treasuries and the dollar, which I suspect will be coming at some point. With gold rising as much as it has already to over 5,000, we haven't even really heard a lot of talk about a U.S. dollar currency crisis. I mean, it's more of inflationary talk initially, central bank buying, now investor demand and investor diversification going into gold. Um, there are some people that obviously are talking about currency risk and the devaluation of the dollar, but I think that's going to be a trend that's going to continue to happen over the coming years. And if I'm still right, I think there's at least another 7, 8 more years to go on this bull market. So that's kind of gold. Now I just want to jump into silver very quickly, and we'll take a quick look at the silver chart. And again, there's not really much to talk about here. Silver went up to 119, pulled back to 103, right back up to 117. I am still looking for this new red line here as my support. Can we go into a bit of a sideways range here? Yeah, it's possible. Again, long term, I'd like to see it come back to this green trend line, but I don't know if we're going to get that right now. Given where gold is gone um, and it looks like it's still going higher. I mean, there's calls for 6,000 this year. So my suspicion is we could see over the next 7, 8 years gold rising continually on average about 2,000 a year. So at this price, another 6, 7 years, you're at your $20,000 gold price. The gold to silver ratio is around 45 right now. If we get 20,000 on gold and we stay at a 50-to-1 ratio, silver is going much, much higher than what I would suspect. Let's say even at 20,000, I'm just doing my calculator here, divided by 40. No, that's not right. Yeah, I mean, if gold goes another 15,000 up from here at the current ratio, $100 or 120 on silver, $500 silver looks very reasonable, and that's just given the current gold to silver ratio. So the only other big change I'm going to say what's happened in silver is the following. The CME just announced another maintenance margin increase yesterday. It takes effect today at the end of day. And what that means is the following. On the silver price, let me just pull this up here and expand this a little further. You can see silver went from a fixed dollar amount for margin requirements to a floating percentage base, and they raised it to 9%. So now more people had to put more money in their futures account if they're trading silver. It was at 9% for non-high risk profile accounts. High risk profile accounts was 9.9%. They just increased it to 11%, and for the high risk ones, it's 12.1%. I suspect we're just going to continually see these margin rate increases continue as the price of silver rises. Will we go to 100% margin? I don't know. But I suspect it will continue to rise as silver continues to rise. So that being said, I mean, I mentioned in a Facebook group that I've been selling some of my silver miners, and one of them was Hecla, and I sold some on Monday. So I'm just going to pull up the chart for Hecla just to take a quick look at it. So let me just go to the hourly chart. So on Monday, silver was popping off. That's when it went to 118 and then pulled back $34. And I seen it start to pull back here. I was kind of waiting. I should have sold at 33. I waited a little longer and ended up getting out at around $31 on my position. And then you can see it's kind of continued down. Even while silver is rising, Hecla is a good barometer of what's going on with the silver miners. And you can see that now it's at 27. Will I look at taking another position soon? I might here if silver continues to rise, goes to 125, 130. At a minimum, I think we can see Hecla go right back up to the 33 price. So it's a bit of a trading range right now for me. If Hecla pulls into the low 20s, I'm aggressive buying again. Let me just take a look at SIL. So just over the last couple of days, even the SIL was at 120, pulled back to 110, 1.7. Now it's at 115. I kind of just believe the miner's going to stay in this sideways chop unless silver starts to catch a bid and goes to 130, 140. Then this will take off again. So I'm not adverse to actually opening up a new position on some of the miners, but as I mentioned on the weekend, I'm really selling the majors to go look at some of the mid-sized cap miners and the junior and exploration juniors and the exploration. I think that's where the sweet spot is going to be over the next 2 to 3 years in this coming cycle, and so that's what I'm going to be focusing on. So that's pretty much about it for today's video. Let me just see this other chart that I was going to pull up here. That there's nothing really to talk about here. The final thing I want to point out, which I found quite interesting, is the following image that I just created. I'm going to start sharing it on social media soon. But if anyone knows, obviously Donald Trump is the 47th president of the USA. He's been talking about a weak dollar. Gold has benefited from it. But ironically, if you look at the periodic table for silver, its atomic number is 47 as well. Coincidence? Possibly. But silver has risen significantly in the last year, going from about $30 to, well, where we're at right now, 115, 117. That's a 5x, almost a 5x, no, it's not even a 5x, 4x move on it. And silver's atomic number is 47. Donald Trump's the 47th president. In this picture, his wife is wearing a silver dress. I don't know. I'll let you conspiracy theorists figure that one out and see what you think about it. I just find it very ironic and entertaining. So I'm going to be sharing this on some social media posts sometime soon. So that's pretty much it. I'm going to be wrapping it up today. It was a nice short one, but I'm going to be doing this again on Saturday morning. It'll be probably a longer video with some more coverage. And that's at 11 a.m. Eastern Time Saturday. I'll be live streaming probably for about a good hour. This Friday, I have a podcast interview with Michael Lorenzo from the Silver Institute. If you don't know what the Silver Institute is, probably one of the governing bodies that tracks the price of silver, the miners, supply-demand fundamentals. There's highly regarded reports that they put out. And I've had Michael on the channel in the past, in September when silver was under 30 or under $50. Now we see where it's at right now. So it's well and more than doubled in that time frame. So I'll have him doing an interview with him on Friday, and more than likely that interview will be up on the channel early next week. Next week, Tuesday, I'm going to be having another interview with Jesse Davis, my third one I'll be doing with him. Commodity culture. We'll be talking about gold and silver, but he's more of a uranium expert, and I want to get his thoughts on uranium, where we are in the cycle, if the stocks have pulled back enough to be a favorable entry position, because we need energy. That's the bottom line. For all this infrastructure and growth and AI and robotics, that's all that's coming. It needs major energy. Uranium is going to be a part of that energy mix and a solution. So it'll be interesting to talk to him and get his thoughts on the uranium market. And then the end of the week, I'm planning to do a podcast with Chris Vermeulen from the Technical Traders. And we'll be discussing the metals and the overall markets, what he sees and what he's recommending to his clients. So stay tuned. Next week will be a busy week for podcasts on the channel. And that's about it. If you enjoyed this one, don't forget to like and subscribe. And we will see you on the weekend, Saturday morning at 11 a.m. Take care, and we'll talk soon. Bye.